My name is Eran. I lead the Midnight Initiative at Input Output. For those that don't know Input Output, it's the engineering company behind the Cardano blockchain. It was created 7 years ago by a gentleman by the name of Charles Hoskinson, who probably is known in the blockchain space. He was involved with Bitcoin, BitShares back in 2011, and then co-founded Ethereum, and later co-founded Cardano and so forth. So back in 2019, Charles asked the question, can blockchain keep a secret? If we think about kind of everyday life, most things have both a public side and a private side. Blockchains, for its wonderful properties, make everything out in the open. And that means that all the data, metadata, everything is transparent, and many applications, including DeFi, RWA, and others, require a certain level of privacy. I don't know how many people here feel comfortable having all their financial transactions out in the open, your Amazon searches or purchases, your web searches, etc. We as individuals want to keep some things discreet or private, and businesses want to do the same. So the question was, can we do that? And as we delved into that, we realized it was comprised of two challenges. The first challenge is, how do I protect the data? So you could put data public on chain like most blockchains do. You can encrypt it and somehow give the other party the private keys. Or nowadays, with new technology called zero knowledge, we can actually put proof of the data on chain without actually sharing the confidential data. So for example, I can prove that I was eligible to vote yesterday without actually sharing my details, all my identity, everything else. I'm able to prove that I can transact on a DEX and I'm KYC'd person without including all my identity information. I can prove that my company met carbon credits without disclosing all the vendors and processes underneath. I can do these things in confidence without forfeiting either ownership of the data or the privacy. I get the utility. So that's fantastic, but that's only half of the job. Why? Because metadata leaks a lot of information. Many years ago, I was involved with another project that some of you may have heard if you're in the financial sector, called Symphony, that I helped found in 2014, creating a mesh of network in the financial industry. And somebody was saying that they figured out who Jamie Dimon was among all these so-called anonymous wallets, and they started tracking Jamie Dimon the same way as some people now track celebrities with their jet fuel, and where their jets are going. And this could be a treasure trove, right? If you can see what JPM is about to do. The same could happen if, let's say, we put medical records on chain. I can't see what the doctor is doing, but I can see that somebody starts going to the doctor very frequently, and I know they're probably sick, and so forth. So we got to protect the metadata. But that's turns out to be a lot tricky. There are some companies like Zcash, Monero, that use a shielded token to protect the metadata, but then I can put $100 on that token, hand it over to Jason over there, and we've just done money laundering. Thank you, Jason. How do we overcome this? We realized that we had to think out of the box, and the way we solved it is actually by having two tokens instead of one. You keep a regular token that you can transact with, put on wallets, bridges, chains, whatever you want, and holding that token generates a second resource that is shielded. But because now I have two things, I can put various restrictions on the second resource, like it can't be transferred, no AML concerns. It kind of decays. It doesn't have a futures market, so it's not a security or commodity. It really is a fit for purpose and gives me the utility of shielding and not kind of being out of compliance. So rather than talking about all this technology, I'd like to invite Fahmi and Ben to the stage because I think what's really exciting is what you can do with these kind of concepts. Once you are able to unlock the ability to share proofs, not data, get the utility without forfeiting privacy and ownership, you can suddenly unlock DeFi, RWA, many, many other use cases. And hi, guys.
Hello.
Would love to hear from you. Why don't we start about just introduce yourself, and then we'll take it from there.
Yeah, sure. Hi, everyone. My name's Ben. I'm one of the co-founders and president of Wave Digital Assets. We're an asset management firm in the crypto space, SEC registered and internationally registered also.
Thanks, Ben. I'm Fahmi Syed. I am the CFO and Chief Commercial Officer of Midnight. Prior to joining Midnight, I spent 20 plus years in the hedge fund industry working for two very large funds. So I'm very familiar with trade flow and finance and what asset managers and why confidentiality matters.
Fantastic. Fahmi, I'm going to start with you. You and I have been going and talking with a lot of firms, both retail side, institutional side. Which is the most exciting use case that you've seen so far?
I'm greedy, so all of them. No. I mean, the question I would ask everybody here is, why does privacy and confidentiality matter? Because ultimately, when we all turn up, we get these lapels, we get these badges. So everybody knows my name and where I work. But I don't put my bank account on there. I don't give you my bank balance. And yet, in a blockchain world, you expect your asset to be known. Anonymity is not privacy. Anonymity is not confidentiality. Anonymity gives people the ability to observe who you are, what you're doing. There are enough digital firms, forensic firms in the world who will be paid money to figure that out. And in the asset management world, in many industries, you don't want to give away your secrets to everybody. And therefore, for me, look, I'm a financials guy. Naturally, I am. So I focus on how do I make the clunkiness of digital assets, tokenization, and RWA better? How do I help people trading digital assets find a way to make that better? So whether it's collateral, whether it's trade flow. So that's an area of focus. But gambling, gaming, anything where data has value is important. So I'm greedy, so everything.
Fantastic. And Ben, as an asset manager, why privacy is important?
Yeah, I mean, I think I would go down a similar path to what Fahmi is saying, right? I think when we first started working with blockchains, there was kind of dreams and aspirations of taking out the centralized entity and for everybody to deal with each other in a decentralized way. Actually, one of the original examples that was given to me was, oh, it'd be great if you were to go to a bar or a club and you get ID'd and you can hand over an ID that just says, yes, you're over 21 or no, you're under 21. But what we're doing right now is handing them a driver's license. It's got my address on there. It's got my name on there. It's got my birthday on there, which the absolute date actually shouldn't matter. But, you know, now the bartender and the bouncer and I are best friends because he knows everything about me, which is not something I wanted to share. So, you know, and moving things on the blockchain conceptually sounded like a great idea, and I've been in this space for quite a while now. We're still facing the opposite problem where, okay, we've taken out the middlemen. We're putting all this data on chain. Now everybody has this data. That's also a problem. So I think we're at this next iteration where we're saying, look, if we're going to be able to practically use the blockchain for various different things, we need to do it in a more efficient way. There will be parts of the data that should have privacy. I should be able to tell the bartender either A, I'm over 21 or I'm under 21, and that's it. I don't need to provide any other information to that. And, you know, to have that ID be linked to me also, as opposed to me carrying fake IDs and so forth, right? So that is conceptually where we're going. Specific to asset management, it goes back to what we're saying with regards to, you know, kind of privacy for our clients' assets. When we manage our clients' assets, when we're trading our clients' assets, when we're moving our clients' assets around, providing it as collateral and so forth, we really don't want to share that information with everyone around the world. We don't really want them to know that this is happening. This is not relevant to them. It may impact the market wherein it shouldn't impact the market. And by having a certain level of privacy, we should be able to avoid that.
Fantastic. Fahmi, real world assets. has been something that was talked about earlier today, and we know how that market can get very sensitive when people start tracking each other. What do you think we're going to be able to do next year with this?
Yeah, look, I mean, if you think about the asset industry as a whole, blockchain hasn't even touched the sides. I mean, we are talking about potential trillions of dollars of assets coming on the chain. But if you're a large institutional holder, even if you're a private individual, do you want to represent all of that on chain, that other people can see what you're doing and how you're using that? So when I think about real world assets, everybody talks about atomic settlement, the instantaneousness of it. And I blame Apple and smartphones for that, because everybody wants everything instantly. We don't even go and get our own groceries now. Deliveroo does that, or whoever does that. So it's not instant settlement that you should care about. It's about what you can do with your asset. The value of tokenization is, can that asset, a fund token that you now have access to, disclose selectively what the underlying portfolio is? Because when Elon Musk went and bought Twitter, he didn't sell his shares in Tesla. He leveraged them. He found banks. To average person in this room or outside, they don't have that ability. You have to sell something to buy something. Now take a fund token that you can now tokenize, that has an underlying basket of securities, fixed income, or equities. If it's equities, could have Tesla, could have Twitter shares in there. If you can disclose that selectively to lenders, then suddenly you have a borrowing mechanism with confidentiality, with a real use case. So now I can buy tokens in some of the largest hedge funds, in BlackRock funds. I can get fractional ownership. Great, wonderful, but really, I can now leverage that. Imagine a world of real world assets where you've got your house and other equity and other investments. You wrap it up, you put it on the blockchain at midnight. You then go to lenders. The lenders don't know I'm speaking to each one of them. So whether it's the person over there or the lady over here, they don't know I'm speaking to each of them. And each of them can give me, look selectively, because I permission them, into proof of what I own, and give me a price. How much are they willing to lend me, and for what price? And then I can choose the best option. And all of that is done in a private, confidential way, in a way that can be done with regulated counterparties, with verification of who you are. And I think that's the value of what real-world assets can do, and particularly with ZK proof and what we're doing on Midnight.
Fantastic. Ben, same on leverage?
Yeah, I'll jump in a little bit on that. I think, we could talk about leverage in just a bit, but I want to take a step back and look at how nascent this market is and why it's still the beginning of an opportunity. If you take a look at the RWA space, even if you include stablecoins, it's about $200 billion. If you take out the stablecoin, right now, I think the RWA market is probably, I was looking at this for my class on Monday, I teach at UCLA. And we're looking at probably about a $15 billion market in terms of the RWA assets out there. That's actually not very much, considering how many trillions of dollars of different assets there are out there in the world. And I mean that in real estate, in FX, in commodities, and equities, and everything, right? So really a drop in the bucket, and we're really at the starting phase. And within that, I think, one of the things that we notice is that real estate mortgages are the very first component. So people are starting to look at financial products and putting financial products on the blockchain and trying to use that for something. And our understanding is that's being used as collateral or for collateral. And that leads to the discussion of collateral. One of the things that is very interesting from a privacy perspective on collateral is being able to put the collateral actually on chain and be able to move that around and being able to show your lenders or your borrowers where the collateral is and how to work with that. And that is where a lot of the value is and what we would really like to see. Right now, as an asset manager, we try to perfect this in a very centralized way. So since the major bankruptcies in the past few years in 2002 and 2003, we've been very careful about using exchanges and so forth. With FTX going bankrupt, we're trying to reduce that exposure. So a lot of times when we're trading derivatives, for example, and we trade derivatives on Deribit as an example, in order so that we don't deliver the collateral to Deribit and have Deribit hold our money while we do trades. What we've done is we've done a tri-party agreement, and that is not an on-chain solution. That's a centralized kind of, let's call it a temporary or current generation Web 2.5 version solution, so that it's almost like a tri-party where Deribit knows I have the collateral. They know they'll get it if I default, but they don't get it right now. Somebody else holds it. One of the custodian holds it. So that type of arrangement we can do right now, and we're really thinking about and looking at what is the next solution. What is the decentralized solution? How do we move that on chain? And that's kind of the collateral discussion that we're talking about.
So that's really interesting you say that. I mean, we're all here because we all believe in decentralization or Web3 or what the benefits of blockchain give to us. And the solution to FTX and settlement and credit risk is to go back to TradeFi solutions, to bilateral or tri-party solutions that you can do without blockchain. And so what we're doing again at Midnight is speaking to some of the custodians, not to support just Knight as an institutional asset that can be held by asset managers, but how do they use Midnight's network to leverage and bring that solution of collateral and credit risk and settlement risk management back to a blockchain? So when you have custodians holding assets, they can now hold those assets and represent them as collateral in a confidential way. They can represent the same amount of collateral to more than one counterparty, Coinbase, Binance, OKX, whoever it be. And each of those counterparties can see that in a way that the others cannot. And each of those counterparties can also make sure and attest through the proof that the collateral is good. It is the right type of collateral. It is held at a verified, accredited custodian. Not only that, but also that that collateral hasn't been overexposed, i.e. I haven't collateralized more than 100% what I have, which was the issue around the financial crisis of '08, which led to Bitcoin. So all of these things can come back on chain in a confidential way, and then through the smart contract language, give transactional elements where that collateral can then be called. And if that collateral is natively on Midnight, then it's done in a private way. If they're using collateral sitting on other chains, then it settles on another chain in a net way. And that's about bringing the solutions back onto chain, about solving the problems that the first reaction is, oh, we don't trust it, we'll go back to the old methods of Web 2, or traditional finance collateral management.
Right.
Let me jump in. Not to sound too cliche, just to kind of distinguish between kind of generations of technology. I think the first generation of blockchain technology, we're trying to solve the problem of double spend and not having double spend. And I think now we're talking about solving the problem of having, to prevent double pledging of collaterals and so forth, right? So this is one way to think about it.
It could be the case, but I think for the sake of the audience, we believe in DeFi and the potential of the real world asset market, because if you think about it, in early, say 20 years ago, if you had the opportunity to buy Google or Apple and ride that kind of upswing all the way to where they are today. Nowadays, companies only IPO at a very, very late stage, and you only get a fraction of the value. Who's getting all the value? These are the private companies capturing kind of all the upswing. If we can decentralize some RWA, we can change the market structure and bring a whole other side of the economy in. But we'll have to do that somewhat in a compliant way, right? How do we help, other than protecting the metadata, the data, to still be compliant? Where does the compliance data go? Who's kind of involved? I don't know, Ben, if you can share that.
Yeah, I think this is something that, we had discussed previously, and I was asking about this. I'll repeat the question here. In terms of compliance, I think it's very easy to talk about privacy. There's always a question of, if the government comes knocking, does the data get released or not? And I think that was a deep discussion we actually spent quite a while looking at and talking about.
Yeah, so Midnight is all about privacy and confidentiality associated to identity. So the ZK technology that we have allows individuals, enterprises to retain full control of their data and their metadata. It sits on their database, sits on their device. They present it as a proof. Once it's on, they're the ones who control all confidentiality around that and the ability to disclose and shield that information as either part of a transaction, as part of any flow, as part of any partnership. But in the same way, the owner of those private keys can enable reporting or give access to certain parties for reporting. So, for example, asset managers or individuals trading assets, tokenized assets or other tokens on Midnight will have accounting requirements, tax requirements that they have to file. So how do I give my tax accountant access without telling him all the details that he doesn't need to know or she doesn't need to know? Well, I can give them read-only keys with my permissioning that gives them access to certain information that is necessary for them, disclosures that they need, in the same way that disclosure is required as part of the collateral lending or part of the payment process. So that's the value in some of the compliance tools that exist on Midnight that application builders, that partners, whether they're custodians, exchanges, application builders, not just in financials, gambling, in gaming, in other marketplaces where data has value, can give that selective disclosure to other parties.
Fahmi, you just mentioned gambling, where obviously there's, whatever is on the table is fully visible. Whatever is in your hand is private. Midnight launched testnet about a month ago, and it's already gone crazy viral. What other use cases, and I have seen the drones and the nuclear reactor stuff, what other things, sorry for name dropping, what other things do you think this audience would be curious about?
So let's take the gambling example. When you go to a poker table, what do I need to prove? I need to prove I'm the right age, I'm in the right jurisdiction, and I have the money to go and spend and gamble. Fine, check, tick. I'm at the table, now I'm gambling. How do I trust the croupier? How do I know they've shuffled the deck? How do I know they've not gamed it or changed it because I'm now winning every hand in 21 and blackjack? So I'm counting cards or whatever I'm doing it well. So the proof in Midnight is that it gives you two-way attestation. I can see the croupier has shuffled the deck, or I have proof, and I can see that they haven't amended it. You play battleships, the same thing. You play rock, scissors, paper, scissors, same thing. I like the idea that in Midnight, we've all been young and play. My kids collect Pokemon cards, and you pay stupid amounts of money for a foil packet, which you open up, and you might get a shiny foil, Pokemon character, and the other ones are just not worth a lot. Well, Midnight gives you the ability to build NFTs where I could buy something and gift it to somebody else. I don't know what I've bought until the person I've gifted to has opened it. So there are use cases where things in Midnight around NFTs, around gambling, around gaming, where we're asking builders to come. If you think the technology that we have, and come and speak to me, come and speak to Eran, come and speak to the wonderful people we have at Midnight, helps you better your business, better what you're trying to build. Come and speak to us, because I think we have great tech, but we have people who can work with you and help your business be better. So we're going to distribute to everybody in every chain, pretty much. If you're in Bitcoin, Ethereum, if you're in Solana and other chains, you will get a distribution of Night. Come and use the computation power that we give you in Midnight, and come and tell us what you want to build and why we can help you, and how we make that and extend that into real-world use cases that gets mass adoption.
Ben, final few minutes. You guys have been really involved with gaming and some other applications. Fahmi gave some examples. Share yours.
Yeah, I think I see a lot of excitement in the gaming space. I think in the US, traditionally, I think the gaming community and the crypto community have not gotten along. There's a certain level of distrust. But I spent some time in Asia for my work, and I don't see that type of tension in Asia, for example, in Japan. A lot of the major companies in Japan, like Square Enix and Sega Sammy and Bandai Namco, these are major game developers with a lot of IP. They're actually very gaming positive. I was speaking with the Bandai guys. They had a $50 million fund they deployed. And I said, hey, what are you going to do next? They said, oh, we'll raise a $100 million fund. We're going to deploy that. So I said, great, you guys have a lot of investors? He looked at me, he said, no, this is all Bandai money. So they're corporate in for $150 million, Web3 ventures, and I think they're building a metaverse with the Gundam robots. I don't know if you're familiar with that. So it's quite exciting. I'm looking forward to being able to kind of participate in that universe and so forth. And I think that's a very interesting space. And I think we're now starting to see some adoption in the US. I think recently there was a game out, I haven't played it, it was like Out of Bounds or something like that, that that has reached a lot of adoption. They don't talk about crypto very much, but all the assets in there are actually on chain and so forth. So they're seeing, I think it was like a million user adoption in a very, very short period of time. So, quite an exciting discussion. So maybe we're coming around. So, yeah.
Got it. Bringing it home, Fahmi, what do we expect next year? 2025, we just had elections here in the US, not getting into politics, but obviously some upward trends, hopefully, for the industry.
Well, I'm an Englishman in New York. I'm not Sting, but I am an Englishman in New York. So I'm not sure I'm the right person to comment about US politics and the election. Look, everybody knows that the perception is Trump and the administration coming in is positive for this industry. It might help with regulation. Uncertainty never helps. The only place uncertainty helps is with traders. Traders like uncertainty because they can trade and manage that. But for others building businesses, building solutions, having some certainty helps. So I think the regulatory clarity will help. For Midnight, we're moving in Q1 to our distribution phase, where parties become eligible for the token. But beyond that is we want to build the ecosystem. We want to build a big, diverse, strong ecosystem, which is really bringing real adoption, real use cases, where confidentiality, privacy, identity matter. And that's in every walk of life, that's in every walk of industry. And we want builders to come. We want builders to come and talk to us, come and use our tech, both as an L1, but also an L2. If you're building payment solutions on another chain, do you want to build a ZK solution there, the identity solution there? Is it made for that? Or do you come and use Midnight as that layer, as that authentication? If you're building AI solutions, deep-in solutions, which was before, everything doesn't have to be on one chain.
No,
the world can be a multiverse.
Absolutely.
And we think Midnight could be the meta chain to that multiverse.
Absolutely. We sometimes use the term, there's no one ring to rule them all, right? Every use case is going to need a different combination of technologies. I think one of my favorite use cases that Fahmi and I discussed is how do we take a DEX like Uniswap and make it KYC compliant? Well, if you can put an identity ZK attestation on chain and then make sure that every transaction kind of on Uniswap gets only processed if that attestation is there, we're able to elevate an Ethereum application layered on with Midnight to become a better application, a more compliant application, a more useful application. So my hope is whether you're using Midnight or any other technology, that 2025 will bring us a wealth of opportunities, better kind of rails from the regulatory stuff to kind of set us on the right track, and we'll see just an explosion in the market of usefulness and utility for all of us.
I agree, and I want to thank Ben for joining us. And I also learned something today, that you're a gamer, so I need to get some tips off you.
Indeed. Folks, I think our time is up, so thank you for taking the time between all things and staying for the end of the day. I think there are drinks outside, so if you want to come stop by and say hi, we'd love to meet you, and otherwise, have a great rest of your day.